Welcome to the Investors Playbook Show, where our mission is clear: empowerment through financial education. We firmly believe that financial freedom isn't a privilege. It's a right that's available to everybody. Each week, we dive deep into the world of finances, breaking down complex topics and making them accessible and actionable for everyone. As we grow this community, we invite you to join us on this journey. Why tune in? Because together, we're not just learning about wealth, we're building a movement, reshaping futures, and proving that with the right knowledge, financial success is within everyone's reach. It's time to get off the sidelines. Let's go. Yo, what's good, people? Investors Playbook. We here with you with episode 11. Deshawn Edwards.
And Cornell Rowan. And today we're going to talk about the ease of investing. So I know that everybody that I go to, well, not everybody, but most people that I go to that are not investing yet, I ask them, like, when are they going to get started? And usually they're worried about not having enough money or not knowing enough, and they get analysis paralysis. And I try and let them know the best way to get into it is by doing it and finding out yourself. Like if you throw in $5, it's not going to hurt you. Like we spend $5 on so many other things, little things that don't matter. Like you might go buy a $5 snack. You see what I'm saying?
Right.
Like some,
Right.
that's what I'm saying, like candy, cake. But when it comes to putting $5 in the stock to see how it works, people don't want to do that.
You know what I think it is? I think it's a combination of them being, like you said, them not knowing what to do, and then fear that this $5 isn't going to actually do something, right? Or the fear of losing that money completely. And I think that is what really needs to be tackled. People have this notion that if you invest in the stock market, it's like gambling, and you can lose your money or lose your investment. And I mean, I think gambling is a little different than investing in the stock market.
I think it's a lot different.
It's a lot different than investing in the stock market, but at the same time, it is if you put your money here, just like if you put your money at a table, you have the risk of losing it all and getting nothing. It's not necessarily an exchange of goods. You give $5 and you get something that's worth $5. You give $5 and there's a chance that your $5 could turn into 10. There's a chance that your $5 could turn into two. So I think that fear is what makes people also not invest. But imagine like just putting that $5 in and then putting more $5 in and then that actually doing something. That is what people kind of need to realize, right? That if you're going to invest, and we always talk about this in all our videos, anything that you invest, just be prepared to lose it. But that's what this video is all about: how easy it is to invest. So yeah, I mean, it's a couple of ways that since me and you started investing, that has changed. That made investing even easier. Like when we started, it wasn't as easy as it is now,
At
right?
all.
Um, One of the main things is the fact that we used to have to pay to make a trade. We used to have to pay money, and I imagine before we used to have to pay. That people will probably have to like go or make a call to their broker and say, "Hey, look, I want to place uh, a I want to buy some stock in this." Like all the apps that we have now, it's just make investing a lot easier. But previously, when we started, what was we paying? Like around $8 a
It was
trade.
almost $8. I want to say it was like 7.49, something crazy like that.
Yeah,
And the thing is, when he says trade, this means every time you buy into a stock and every time you sell a stock.
literally.
So really, yeah. So really, if you buy and sell, you're paying $15.
Yeah.
That's
You had to be
$15 right
very
there.
strategigic, you know what I mean? Very
So
strategic.
yeah, so if you didn't make at least $15 on that trade, then
Mhm,
you're negative.
mhm, mhm. Facts.
Unlike today, where you can buy, sell, and pay nothing as
Yeah.
far as transaction fees, it was crazy back then. So
Mhm.
now it's a whole lot more accessible for everyone. And as Deshaun said, another thing that makes it so easy is that we have these smartphones where we can just download an app and we can just trade from our app. We don't have to talk to anybody. All we have to do is say, "Hey, I want to buy this," and I just type it into my phone and I'm good. I bought a portion of a company.
That's it.
It takes seconds to do.
Seconds. And I think even beyond that, setting up your account is super easy too. Like how Robinhood, I mean, we all know setting up an account in general is easier now because of face recognition. But yeah, setting up a brokerage account is simple. It takes you less than like 5 minutes to set up a brokerage account, and even less than that to purchase your first stock. So really technology has just evolved to a point to where it has made trading so easy, right? Is there's like you mentioned, there's a person that you don't even have to talk to. It could just all be on you. Not that we recommend starting trading and not talking to anybody. Like, yeah, and get some education, get some knowledge before you just jump into the stock market. Not paralysis to analysis, of course,
Right.
but
Not
but
yeah.
yeah, not paralysis to analysis. Don't get stuck reading about the stock market and never investing. But just brush up on information. Or do you just say just go?
Because just go, man. Like you don't have to start with an amount that will cripple you if you
Yeah,
lose. Okay?
that's true.
Put
That's
in
true.
$5. You see what I'm
That's
saying? Like
true.
I
Yeah.
almost said everybody that I know has $5 that think it's fair. It's not
Everybody.
gonna change your life. It's
Everybody.
not $5 is not gonna change your life. Even if
Yeah.
you don't have it, $5 is not gonna change your life.
Yeah.
You
So
see what I'm
okay.
saying?
So then with that, let me and I know that this is something that is also new that we well, I guess it's kind of weird because we when we started investing, we were able to purchase parts of what was that app that we used to use, man?
Loyal 3.
Loyal 3.
Mhm.
Loyal 3 was us almost like I guess it was like group because when we put the trade in, it didn't go through automatically. It's like we had to put the trade in and then we had to wait for like it had to like close on a day where everybody was then putting their trade in.
Yeah, it worked kind of like a mutual fund.
Yeah, it
But
definitely did.
I were we able to do partial shares?
I feel like we were, bro. I feel like we were able to do partial shares on Loyal 3. I
Okay.
think I remember that.
Got you, got you.
But now partial shares are everywhere. Like you can go on Robinhood, you can go on Fidelity, reputable Fidelity, and purchase Amazon for $5.
Yeah.
You could do that now. So that is another thing that has made investing easier. We're saying $5 because we're talking about how easy it is to start, but you can literally start with $5 and purchase whatever you want.
You can start with $1.
You can start with $1 and purchase whatever you want.
But just know that what you put in determines what you get out.
Yeah.
So if you put $10 into Amazon, right? And Amazon is an $100 stock, is worth $100. If
Hmm.
Amazon goes up $10, you're only going to make $1.
Yeah.
You see what
Exactly.
I'm saying?
Yeah.
So
That,
if it goes up 10%, you're only going to make 10% of what you put in.
that's yes. Yes. So yeah, remember like I mean you said it best. What you put in, don't expect to make crazy gains on $5, basically.
Yeah.
Yeah. You can make some money off of it.
Right.
But I think the important thing is making sure that you're starting. And I agree with you, Cornell. Just start. Start with five. Start with $1. Start with $10.
And
Just
the
do.
thing, yeah,
Hmm.
because the most important thing is being consistent. Because yes, this week you might just have $5, but think about if you put in that $5 every time you got paid or every time you got some money. You see what I'm
Right.
saying?
Mhm.
Eventually, that $5 every 2 weeks or $10 every 2 weeks, whatever just you decide to put in, whatever won't affect your daily living that you decide to put in. Think about what that will be 10 years from now.
Right. Yeah.
Because not only I'm sorry, go ahead.
No, I was just saying. Yeah, you're right. That's all. Go ahead.
Yeah. Because not only is the money that you're putting in adding up, but also there's compounding interest from the stock
Hmm. Yep.
going up.
Exactly. I think another thing too that makes investing a bit easier is the amount of resources out there, the amount of education that's out there, the amount of information that's out there. People used to think that this was some kind of best kept secret,
Mhm.
that investing was only for the rich, investing is only for people that don't look like me, investing is scary. But the reality is all that information is out there now. You
Yeah.
mentioned before we have our cell phones, we have computers in our pocket. You can go watch a YouTube video immediately after watching this or reading this or listening to this and read about investing or hear about investing. Or you can follow us at Investors Playbook LLC and learn about investing. It's so many resources. It's almost like there's no excuse. The only excuse is you saying, or you choosing to have an excuse by saying, I don't want to start right now. But there is not a, I don't have enough money. There's not a, I don't have enough knowledge. You can literally do both of those things very quickly and just start. So the amount of education out there is endless when it comes to investing. And there's so many different markets to go invest in. You just have to pick one. Really, just pick one. So I think that that is a huge difference. I don't think that previously it was just so accessible to learn about investing and how to get started. But now, yeah, man, there's no excuse. No excuse at all.
Right.
Yeah.
And also when investing, it's important that you're not just following meme stocks. I know people that, downloaded Robinhood and just wait for a lot of people to start talking about something. It's like, oh, I'm gonna jump in this. Like the GameStop, the Bed Bath and Beyond,
Uh,
the Dogecoin.
the
You want
AMC.
AMC, man, you want to make sure that whatever you're investing in is something that has value. And people will ask me all the time, well, how do I know what has value? What do you use? What products do you use? I'm sure that you're not using products that you don't like. You
Probably
see
not
what I'm
shopping
saying?
at GameStop.
You probably
Like,
you're probably not shopping at GameStop. And and my thing is, if you're using these products, I'm sure that other people like these products also. Like,
mhm.
look at what phone you're using. Most people that I encounter are using an Apple phone. You
I
see what
thought
I'm
you were gonna
saying?
say Android. No, I'm just playing.
Definitely not Android. Definitely not Android. So,
This man got
and
jokes. Android, go
and
ahead.
the thing is, Apple is the highest value stock in the world. So really, what companies are good. And if you don't want to take the risk and just invest into one company, there are mutual funds that are already diversified that you can put your money into, and you don't even have to think about it. You could
No.
just continuously put your money into this every 2 weeks
Hmm.
and watch your money grow.
Yeah. Yeah. And that's another thing. People are afraid of putting all their eggs in one basket by a mutual fund. You're literally putting your eggs in a ton of baskets by buying a mutual fund. And what a mutual fund is a collection of stocks. So if this one stock in the mutual fund goes down, you have other stocks in the mutual fund that are holding it up. It's almost like you're buying a team of stocks by purchasing a single portion of a mutual fund. Another way to make investing easier. It takes a lot of the thinking out of it. Just look at a mutual fund that has been doing somewhat good for the past number of years, or they have mutual funds for different sectors, technology, airlines, um, brick and mortars. They have all types of mutual funds. So that's another way that you can just get started is to purchase a mutual fund, which is a collection of stocks, ETFs, exchange traded funds, REITs. It's a lot. It's a lot of different ways to what do they say? Skin a cat. There are a lot of different ways to skin a cat. Sound like some old folks thing.
It is. It doesn't sound like it is.
There's a lot of different ways to skin a cat.
So they've actually made it easy. Yeah, it's boring not to day trade and try and hit $1 million in one day or one week in the stock market playing options. Yeah, that might not be this might not be the exciting way, but it's the almost assured way to become a millionaire.
Mhm.
If you're just consistent and remember what you put in, you're not going to become a millionaire putting $1 in every 2 weeks. Okay, so at some point you're going to have to raise it up as you start getting paid more. Instead of upping or upgrading your lifestyle every time you get a increase in pay, it's okay to invest more. You see what
Yeah.
I'm saying? Let me put more towards my future so that that looks better, or let me put more into my child's 529. So
Hmm.
delayed gratification will increase. You'll have an increased amount of money at the as you get older.
Right. That lifestyle creep is real, man. It's so real. People will tell me, you remember it was someone who said to us, I'm making the most money I'm making right now, but I can't seem to keep up. The economy is only for it's not built
I
for people. And I'm thinking,
Oh, that you talking about the comment on TikTok.
I'm like, what? Okay, let's
She was
talk
like,
about it.
what does he expect us to do?"
What am I supposed to do? And I mean, and that's the real question. But I would just say, what exactly are you doing right now? Do you have a budget? Are you setting money aside to start investing? Or did you fall victim to lifestyle creep? You started making more money, so then you started doing more things that say, I'm making more money. Did you increase your car payments? Did you start going out to eat a lot more? Are you now buying drinks for people at the bar because you're making like what changed? Because if you're just now making more money and you're you're still not able to kind of take care of the things that you need to take care of, something changed when you started making more money. Like
Right,
you a decision happened on you saying, I make more money now I'm gonna do this thing. And we gotta talk. That's what we gotta talk about. So lifestyle creep is real. And instead of, like you mentioned, Cornell, instead of it falling victim to the lifestyle creep, make more money and put that more money that you made into investments.
right.
Put it into, like, let your money work for you, not against you. So yeah, I think that as we are growing and becoming more professional and getting more money, we have to think about the more money that we're making and where it's going. It's important to start thinking about stuff like that.
And,
Um,
and to and to
mhm.
easily to make the decision easier, or to make investing easier, they actually have it so where you can automate these
Yes,
transfers, right?
yes.
So every 2 weeks, what you can do, set up an automation, say, hey, I want to draft this amount of money, whatever your pockets allow you to do. Everyone's different, everybody's situation is different. So you can
Hmm.
say, hey, I want to transfer $10 every 2 weeks, or $100 every 2 weeks, or $500, whatever you have, every 2 weeks, and I wanted to invest in this stock. So now you don't even have to think about it. It comes out like a bill.
It's hands off at that point.
Hands on.
Once you press play, it just goes. And that's what a lot of investors call dollar cost averaging. So, say for example, you are purchasing Ford stock. 2 weeks pass, the $100 comes out of your checking, goes into your brokerage account, then that $100 gets invested into Ford. It doesn't matter what the price of Ford is, because again, you can purchase fractional shares. It's
Mhm.
$100 worth of Ford stock. It can be, I don't know, 9.3 stocks or 9.3 amount of Ford stock, whatever. It doesn't matter. $100 straight to Ford. Now Ford goes up to $11 the next 2 weeks. You put that same 100 in, and instead of having 9 shares, you have 8.7. Doesn't matter. You're purchasing more shares of Ford, and it's automatic. Someone said once that time in the market is more important and more valuable than trying to time the market or timing the market. So again, the automation is it's something new. You used to have to be intentional, get on your phone and say, let me go buy this stock and transfer this money to here. But now you just press play. You
Yeah,
press play and it's done, man.
I agree. It's that easy. And man, the message that you said was very powerful. I don't know why you chose Ford to talk about, but
Because I invest in sport, okay?
oh, I was
Ford
like,
stock to
out
the
of any
moon.
out of
Okay?
any stock you could have said, this person Ford.
Ford stock to the moon, man. That joint been at $10 for the past 10 years, man. Ford stock to the moon. Nah,
So
Ford has really good dividends, man. Come on, Ford got that. That's that payment on top of payment. That's why I invest in Ford. So yeah, you caught me, bro. My automation goes into Ford every 2 weeks. Money's coming out, going into Fidelity, purchasing Ford stock. Okay, that's what's happening, bro. Cause Ford
okay.
makes you money, man. I mean, dividends is another thing. Not in this video, but dividends is another way to make money in the stock market as well.
Yeah.
But yeah, that's why he was making that face.
Yeah. Ford.
Like he could have said Amazon, Tesla, Apple. This man said Ford.
That's pretty wild, man. All right. So
Yeah.
also, how the way we've been talking about how easy it is to invest, I just want to talk about how companies make it seem like it's so hard to do, and
Mhm.
that they make you feel like you need them in order to start investing.
Yeah.
So
Yeah.
I actually encountered someone at a network event that I went to this week. She told me that she was with Primerica. So of course, I've been caught up in so many presentations with Primerica. Somebody will be talking to me about financial health and financial wellness, and they'll be like, "Hey, we should chat." And then when I come to chat with them, they got their manager with them, and they're like, "All right, so we're ready to start this presentation." I'm just like, "Dang, they got me again, man. I am
They
like a
got me.
sucker." Think Brian like a sucker for these presentations. So now I'm wasting all this time, and I'm just man. So it got to the point where when somebody tries to start a presentation, I just automatically say, "Hey, I didn't think I was going to come to something like this. Like, no, I'm
Right.
out of this." Nah, yeah. So
Yeah.
it's wild. So I already knew, like, based on it, because I have sat through the presentation. So I
Yeah,
already
I've
knew what
sat
to
through one of
expect.
them too, man. I remember one of my LBs was doing Primerica, and I was like, all right. He gathered all of us up. He's like, let's turn up and hang out. This was years ago. He said, let's turn out, hang up. I mean, hang out, turn up. And I'm like, all right, bet. We get there. He's like, all right, y'all, I got to talk to y'all about Primerica. I'm like, bro, you should have just told us. We could have just signed a piece of paper. You ain't got to tell us to do this. We got, bro. Yeah.
They will
Yeah.
catch you, man.
Man, and they know that don't nobody want to listen, so they won't even say it up front. They'll just be like, "Oh yeah, I have this really good business idea. You should. Are you interested in learning?"
They they talk about it like they own the business, man, and then they
Yeah,
be like, "Oh,
yeah,
and it's crazy, bro." Yeah,
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 yeah. Nah, but no, like you were saying, a lot of people who are in the financial world will make it seem like investing or things that you can do on your own are just impossible. So you really
yeah,
need them to do it,
yeah.
and uh like no diss to any financial advisor, um because financial advisors is another way, right, that you can start investing very easily. They charge you, you have to pay them a percentage of your winnings or earnings, and that again is a choice. If you don't want to consistently look at your account on a biweekly or weekly or monthly, or if you don't want to set up automation, by all means, get a financial advisor. They will take their money off the top and they will do what they do with your money. And that's just you can play that game. And there's nothing wrong with getting a financial
There-
advisor.
There's nothing wrong with it. It's just so easy,
It's
man.
so
To
easy to do. It's so easy to do. But again, it is another avenue to make investing easy, right? By getting someone else to manage your money for you. And this goes back to the automation. It's even less automation on your end. You don't even have to think about. You just cool. Take this and operate my account, and they'll buy, sell,
and
do whatever
trust
they
someone else.
say it again.
And trust someone else
And
to
trust them.
manage
Yeah,
your money.
really, and trust someone else.
So I want
Uh,
to go back to. I'm sorry, we just kind of drifted away from the Primerica.
yeah, yeah, yeah.
So basically, what she did, and this isn't like a normal financial advisor. Primerica is really out here ripping people off. Of course, of course, it's better than not doing anything at all,
Right.
right?
Yeah.
But it's insane, man. So basically, I looked over I had to fact check myself after I told her, hey, they charge some fees. So I went to go see exactly what they charge her. And she knew it because she said as soon as she transferred her money over there, they took over $1,000 from her just to start off the mutual fund. Because what they do is they charge you an upfront cost to get into the mutual fund that's 5.75%
Wait, what? So they charge her to transfer her money and put
to
her money into.
yes,
Are they?
into the
They
mutual
you
fund.
can't. Does Primerica have brokerage accounts,
Yeah.
or are they
So
just working? Okay, they do. They have
they
their
had
own.
they, they have brokerage accounts, and yeah, so they have their own like system. They have
Yeah.
their own Roth IRA and brokerage
Okay.
account,
Okay.
and they charge you to go into certain mutual funds, even if the mutual funds are not theirs. You get what I'm saying? So if you want to buy into like a Fidelity mutual fund,
Yeah.
they're taking their cut out of what you're doing. And every year there was a 0.25% commission on their
Mhm.
end. And you
Yeah.
know, mutual funds already have their own small fee. They're taking a small fee in addition to the mutual fund fee.
Wow. Yeah. I mean, w it makes it easier, but it can cost you, right?
It can
People like
cost
to pay for convenience. I guess this is considered convenience.
I, I don't
But
even
I don't know, man.
convenience, man. Like
I
they
think
ripping
it's
you off.
yeah, yeah, yeah. It's definitely a lot cheaper ways for you. One is to just learn how to do it yourself. But then outside of that, when it comes to having someone else manage a fund for you, yeah, the what was this, $1,000 just like poof went missing.
Just gone.
Anything like that, yeah, you probably want to just do more due diligence when it comes to the person that you're choosing to
And
manage your money, or just manage it yourself.
and of course, 5% might not be a lot. Like for a lot of people that don't have like a huge amount that you're putting in, because you know, like 5% of 1,000 is what, 50. You get what I'm
Mhm,
saying?
mhm.
So, but if you're putting in like 50,000, 100,000, 5% is a lot of money.
It becomes a lot, yeah.
It
It
becomes a
definitely
lot of
becomes a lot.
money.
Yeah.
And it looks like every time that you're buying more shares, you're taking 5% of that also. So it's a upfront cost on all shares that you buy from this mutual fund. It's crazy. They're robbing.
Yeah. Wait. So anytime she transfers, it's a 5%. They're taking 5% of the money that they have to transfer, or something like that.
The way I was reading their disclosures, that's
Hmm.
what it seemed like. So I know that she got hit. She just got into it last week. So she already got hit for by the with the 1,500.
That's wild.
Yeah.
That's
So
and with that same 1,500, she could have put that, opened up a Robinhood, opened up a Fidelity, put that literal 1,500 into a stock, a ETF,
for
a
free.
mutual fund for free.
For
Yeah,
free.
yeah, yeah. So I think, all right. So then let me ask you this: what do you think is the number one reason that people are saying? Do you think it's a cost thing? Do you think it's a fear thing? If you have to just choose one thing, why do you think people have uh, difficulty starting? What do you think?
Uh,
What do you think holds people up?
I feel like new things, and that's with anything. New things are scary, man.
Yeah,
You see what I'm
that's real.
saying?
That's real.
Like
That's real.
it takes a while to try new things, even if it seems easy.
Hmm.
Like kind of like, and I've experienced it before. Like when I could have taken the equity out of my home and bought another one. Like the math was right in my head, but I was just thinking like, man, is it that easy? And it probably was that easy.
Yeah,
You see what I'm saying? I just didn't
yeah.
do it. It was an outlier.
No, and that's real. That's real.
I just didn't do it.
Yeah.
So yeah, new things can seem scary, and sometimes I guess things can seem too good to be true.
Right.
Like I put my money into the like because you know how people I feel like how people come up. It's like the harder you work, the more money you make. There's
Mm.
no way that there can be an easy way for me to make money where I don't have to physically do something and my money just grow on its own. There's no way. It
Right.
has to be a scam. You
Right.
see what I'm saying?
Yeah.
So
Yeah.
I think that's what it is.
Issue. It all sounds like it's just fear. But I think with fear you can conquer that with knowledge. If you know how things work, it seems less scary, or
Right.
it is less scary because you understand the risk. You understand the value. It makes sense, not just someone telling you you put your money into this and it'll make you 10% every year. And that's like, all right, I hear you, but yeah, nah. Until I see it happen, cool. Well then that's how you do. That's when you do the research. That's when you like read up on it to make it less scary for you.
And you know the best teacher experience. Like
That too.
I can read about how to swim all day. Like I
Yeah.
can Google how to swim and they tell me, but until I'm actually doing it and I try
Mhm.
it, like without ever trying to swim and I just read it, if I jumped into a pool, I would drown, bro.
Yeah.
You know what I'm saying? Like it sounds good. Like all I have to do this, okay. But if you don't get that experience and actually jump in and start doing it yourself,
Yeah.
you're never going to really understand how to do it.
Yeah, you got to get those reps in, and that's why we're talking ease of investing. You can start with a buck, literally. Well, not like a buck, 100, like a $1. You can start with $1 and test out what it is to be an investor with a single dollar,
What it all?
$5, $10. You don't have to have a ton of money to get started in this game. You don't have to have it. And another thing that a lot of people do is you'll get advice from people who've never invested before. People will say that, yeah, nah, that thing, that's scary. I don't touch that stuff. Have you ever tried it? Have you ever yourself invested in the stock market? If not, how can you give advice? Because it
Ooh,
sounds like the advice that you're giving is the advice that someone else told you,
you know,
and you have no experience with it. So you can't you can't listen to people that haven't tried it themselves. If someone's telling you that they don't touch the stock market, they don't do it, it's scary, you shouldn't do it either. You got to really think about that for a sec. They've never done it, never touched it, never looked at it. What real advice can they give you on this situation and or this thing that they've never done? So
and you know one thing, one phrase, if that I really do not like, they think investing is like gambling, right?
yeah, exactly.
So yes, short term, I feel like investing is like gambling. So if I'm day trading or swing trading, yeah, it's pretty much gambling because I don't know. No one knows what a stock is going to do short term.
Mm, yeah,
No one knows. But one thing I can say that I can honestly say, every single stock that I'm in long term that I've had over 3 years, I'm up. Every
time,
single stock,
time
every
in the
single
market,
stock,
bro. Time in
every
the
single
market.
mutual fund, I am up.
Hmm.
I'm not down in anything.
Time in the market. And after I finished my talk yesterday, a lot of people came up to me and was like, "Is it too late? Is it too late to get into things that have taken off?" That is- no, man, it's not too late. Because, like you just said, 3 years ago, every stock that you purchased is higher now than it was 3 years ago. So if you tell, or if you even think that it's too late, imagine what you're going to be saying next year, and the next year, and the next year. You're going to be saying, "Ah, man, I wish I invested in 2023 because
Mhm.
now the price of this is blah blah blah, or it's too high now." And it's just the sitting on your hands, the waiting, the paralysis through analysis, the listening to advice from people who've never done it before. All these things are preventing you from getting started, and all you're going to do is end up regretting it in the future and saying, "I should have, could have, and would have if I had known." You didn't know. You just chose not to do something. So yeah, yeah, man. Investing is easy. It's easy to get started if
It, if you do it the right way,
you
it's
do it the
easy.
right way.
If you
Yeah,
do it the right way, it's easy
do it
because
the
you
right.
can do it the wrong way.
Hmm.
So beware of all these penny stocks. Like, hey, you look at a penny stock, hey, this is only 16 cents. What if it goes to a dot? Be careful with that because that's a good way to lose money.
Yes.
Okay. Because
Yeah.
all stocks do not go up.
Yeah.
All right. So you want to make sure that you're investing in a reputable stock.
Yeah.
As we said earlier, think about businesses that you shop with
Hmm.
currently. Also look at the track record of these businesses on Fidelity or really anywhere you can Google it. You can see how a stock has moved in the past 10 years or even the whole lifetime
Yeah. The
of the
max.
stock.
You can look
And
at.
and one thing that I like to do when I'm buying stocks, I know Deshawn, as Deshawn said, it's never too late. It's about time in the market. But what I do is I buy stocks that are not near the 52-week high.
Yep. It's tons of.
So
Yeah. Yeah.
right. So every 2 weeks when I'm buying my stocks, I'll look at what stocks are furthest away from the 52-week high. Of course, these are reputable stocks, stocks that I'm already invested in, and I'll invest in those stocks. I'll just
Mm.
put more into the ones that are a little down,
And that
right,
makes sense. That
rather
makes sense.
than the ones that are all the way up. So
Yeah. Yeah. And I think the important thing is to just, even if you see the market as a whole, like say S&P 500 is on a rip and everything's going crazy, you're still not buying anything. You are doing your analysis and seeing, hey, Well, S&P 500 ripped. Google is almost at its 52-week high. Amazon is almost at its 52-week high. But AMD is like doing a little struggle move right now.
Right.
I'm gonna put that money into AMD. Either way, you're investing in the market every 2 weeks. You're putting money into the market every 2 weeks. And that's what we're trying to make sure that people are even understanding. If it's $5, $10, $100.
Whatever you
Yeah.
have.
Yeah, whatever you have, you can start. And you don't have to necessarily try and time the market. But you can look and see, like 52-week high is a good indicator that shows whether or not you're purchasing at the most expensive price of the stock, or if you're, getting a deal. So yeah, those are things to look at as well. But it's
When
just the consistency. Make sure that you can, yeah, consistency.
Yeah. When you
Mhm.
get your check, don't sit here and give your money to all these companies, credit cards, and
Mhm.
not give something to yourself.
Right.
Okay? Because you are always the most important. Okay?
Mhm.
So save something for you, your future, and stop giving all your money to all these businesses and starting from zero every 2 weeks.
Right. Facts. Facts.
Retain some of this money and make this money work for you. It's real. You don't have to trade your time for all the money that you get. You don't have to do that.
Mhm.
It's real.
And I mean, when you really break it down, we know that working 9 to 5 till you retire, it doesn't work. I mean, I'm not gonna say it doesn't work, but it's just not the it's not the
The
way.
dream. It's not the dream.
Yeah,
Not the
the
dream.
dream.
Some people have to do it. Everybody can't be financially free.
Right.
Some
But
people
that's
have
the
to.
thing. Everybody can be. I feel like everyone can be financially free if they
Every
choose.
everyone has the opportunity to
Yes.
be, but the
Everyone won't be.
society still has to run. There
Yeah.
has to be some people that work.
Yeah.
It just is what it is. Like,
Yeah.
yeah, everyone has the opportunity. Everybody can make choices to make them financially free, but everybody cannot be financially free.
But here's my thing, you can still work. I'm not saying quit your job. I'm saying work, but also make other things work for you. You shouldn't rely on you putting money into a retirement account. And then once you retire, you're good. As you're working, use, like you said, that paycheck to put money into other things that are going to make you money. You can be financially free and work until you're 59 and a half if you choose to. But just working and using that as your only means, like that's gonna be your paycheck.
That's
The
dead.
one, the one, the $1.5 million in your retirement account for the next 20 years of your life, it's not going to really work out for you. You have to have other ways. You have to have other pools and pockets of money in order to do those type of things. Is where you start investing now. You start putting money into, like, you have your emergency fund, you have your individual retirement account, you have your individual trading account, and then you got your 401k. All of these things should be making you money at the same time, right?
Yeah.
Your biggest supporter is going to be your paycheck right now until you find another way to make the exact amount of money that your job is giving you. Use that paycheck money to build your empire. Seriously, like, I know a lot of people want to almost give up and just say, I don't want to work the 9 to 5. But when you really think about it, they break you off a nice chunk of change so that you can go do what you need to do with that money. You just have to make sure that you're doing what you need to do and not spending it on companies, not going buying bags and trips and doing all these things that aren't going to really make you any money. So
Right.
I
And it's
think that,
okay. I'm sorry.
yeah. No, go
And
ahead.
it's
Go ahead.
and it's okay to do those things just in
Yeah.
moderation.
Yeah.
Okay.
Ex-
So we're not saying never take a trip. We're not saying never have fun.
Right.
We're just saying do it in a way where you can still save money for yourself and buy assets that produce
Right.
more money.
Facts. Facts. Man, yeah. Yeah. I hope people, when they hear this message, they just get started. They press play. They do something. You know what
Get
I
off the
mean?
sidelines,
Get off the sidelines, okay?
man. Get in the
Stop
game.
watching. Stop watching the game. Get in the game.
Stop
That's it.
watching us do it.
Get in the
Stop
game.
watching us do it. Hey, EA Sports was on to something, man.
Yeah. That's what it is. EA Sports. Get in the game. Or is it? I thought it was. It's in the game. Is it
It's
get in
in
the
the game.
game?
It might be it's in the game.
Yeah. But either way, man, get off the sidelines. Get started. Um, yeah, just And I think a good way is starting with your budget. Figure out how much money you're bringing in. Figure out how your expenses, whatever's left, do something with that amount. Put that into like slide that over into some Apple stock or some Amazon stock or some Ford or some Ford. You
Or
know.
if you a big baller, buy a rental property. You see what I'm saying? Because
Oh
stocks are
yeah,
not the only
definitely.
way. Stocks are not the only way to build passive income.
Yeah,
So
you're
you know
right.
there's plenty of other ways. There's intellectual property. There's investment properties.
There's
There's
tons of ways to invest. We only talked
yeah,
about stocks today. But
right.
there are so many ways to invest. Like you could become an angel investor for someone else's new business. You can, like you said, purchase real estate. You
Of-
can,
Yeah.
yeah, it's man, like it's
But of course, with the others, you need more than $1.
you need more than $1. You can't buy a house with $5 down payment.
Yeah,
You're gonna
you
have to
don't have
save
a
a little
little
bit more.
Barbie dream house. It's the only house you get.
Got an easy bake oven in that thing, all right, but yeah, so the others, yeah, you do have to plan a little bit more. But with stocks, it's a very low minimum investment. You can't start with $1, $5. So, but it's not the only way to invest. And if we wanted to make this video longer, we could talk about the ease of investing across all those things. But I think you ready to wrap it up. What you thinking?
Yeah, I think we pretty much hit all the points. But
Okay.
yeah, as you said, I just hope that people take it more seriously. And it's not even if they're not taking it, even if they are taking it seriously, and they just feel like they need all this prep. Man, just jump in with an amount. You can't lose more than what you put in. If you're as long yeah, so just jump in. Jump in with
Mhm.
$5. Just jump in, try it.
Get off
Try
the
the
side.
water out.
Get
Just
off the sidelines.
learn
Get off
learn
the
to
side.
swim. Learn to swim. Learn to swim. Stop reading about swimming and learn to swim, man.
Learn to swim in the kiddie pool, man. You could do
Yeah.
that.
Yeah, in the kiddie pool. Yeah, you can't drown with $5.
Can't,
So,
can't. But yeah.
yeah.
But nah, man, this
So,
was
where can they find us, bro,
all right.
if they
So
want to learn more?
you can find us on Instagram, on YouTube, on anywhere you listen to podcasts, Spotify, Apple Podcasts, Investors Playbook LLC, everywhere. Our website, investorsplaybookllc.com. Come check us out, man. Literally, it's yeah, that's it. Investors Playbook LLC. Subscribe to the YouTube, listen to our podcast, download some videos. We're on episode 11 now.
11.
Getting up there. We can't.
Don't
Episode
do it.
11, bro.
Don't do it.
Nah. But yeah,
But
man, that's it. But all right, signing off.
as always, we appreciate y'all.
Definitely. Thank you for tuning in. Peace out.
Peace.